Good afternoon. My name is April Palmerley, and I'm the CEO of the American Chamber of Commerce in Australia. I'd like to thank you all for joining us here today for the second in our FinTech series. We are partnering with Emerging Payments Association of Asia for this series, and I'd like to thank Camilla Bullock, who is the co-founder of EPA Asia, for joining us today and for partnering on all of these events. Any questions that you have throughout the presentation can be typed in the Q&A box. If you just move your cursor, you'll see a toolbar across the bottom of your screen, and you can click on Q&A and type a question in there. You can also put any general comments you have in the chat. So please feel free to use that throughout the presentation. AmCham is really excited to be holding this FinTech series because we were supposed to be in Silicon Valley right now doing a FinTech mission with Senator Andrew Bragg, Ben Heap, and Lance Blockley, who's on the call today. So this is the best that we can do in the virtual world, and we're really happy that we can include so many more people than we would have been able to if we were doing it in person. Lance Blockley, you've all seen his bio, you know who he is. He is a foundation ambassador for Emerging Payments Asia, and he is managing director of the Initiatives Group, a consulting firm that specializes in payments. He has about 35 years experience in senior management, and he's advised issuers, acquirers, third-party processors, technology providers, and payment associations in addressing many of the financial sector's most significant issues. I was lucky enough to meet Lance when I was at a Swedish Chamber event at Christmas time, and he had just come back from a tour that he did in Scandinavia. So we are really fortunate to have him here today. I'll turn over to Lance now to introduce the other panelists and to guide the discussion. Lance?
Thank you very much, April. Thank you for the introduction, and welcome everybody to the webinar today. As everybody on the call would be aware, COVID-19, the crisis, has severely impacted the global economy and economic activity, together with the number of payments that are transacting around the world. With international travel and trade also curtailed, cross-border payments particularly have been interrupted. And at the same time, investment priorities have been completely reordered, with many companies now focused on survival rather than new initiatives. So how has all this affected the FinTech sector? Has it been severely detrimental across the board? Or have some FinTech players actually benefited from the disruption and the need to do things differently in the current crisis? So in this webinar, we're going to explore the impacts of COVID-19 on the FinTech sector with senior managers from three companies operating in the payment space. We have Melissa Keir, who's Vice President of Global Expansion for Marqeta, who I know has got some interesting payment platforms that they were looking to bring into Asia Pacific. Vanessa Grellet, who's Executive Director of ConsenSys, a provider of blockchain solutions. And Peter Cheeseman, who's General Manager of Consulting for DXC in Australia and New Zealand. So welcome to our panelists, and thank you for participating. Maybe we could start by asking each of you in turn to briefly describe how the virus and the crisis has impacted your own businesses. So I might start with you, Melissa, at Marqeta. So you're in charge of global expansion. Is this been really detrimental to that? What's been happening at Marqeta?
Sure, great question. I'll start by saying, as odd as it sounds to say this out loud, Marqeta's actually been doing great. Both March and April were months of extreme growth for us. In the US, we support the on-demand delivery customers. Two of them worth highlighting are Instacart and DoorDash. And so those services in the US have become essential to day-to-day functioning of families and businesses to receive their groceries and meals. So we view ourselves as essential infrastructure supporting their businesses. In addition to that, I think like most companies, we're getting up to speed and learning how to work remotely. A lot of us sort of seeing the collision of our personal and professional lives and how do we make that work. From an expansion effort, we're still focused on our expansion. We're just being very thoughtful in how and when we execute against it.
Okay. And Vanessa, how are things at ConsenSys? Has this been a problem for you, this current environment? You might want to unmute.
Sorry. At ConsenSys, we've always had a remote first philosophy. So all our teams and our developers are all over the world and have been used to working online. What was new is working online with our clients. And we are doing a lot of company to company. So we don't have a lot of issues around that. We, all our clients have, took the first 2 weeks to reorganize. But afterwards, I feel like the business was going about as usual. Of course, our clients are being more careful in deploying new solutions. But we think overall it's been quite positive.
Okay. And Peter, what about DXC?
Yeah, thanks, Lance. Yeah, so from a DXC perspective, we took a three-stage approach to this across our group. Our three main focus areas were people, our customers, obviously, and operational excellence. And I'll talk about that one later on. Melissa touched on that being an essential services provider as from a DXC perspective. When it comes to operational excellence, we do run a lot of our customers' payment systems and our customers' core banking systems. And as we know, with this period that we're going through now, those systems become quite critical. So as we've focused on those three areas, our people aspect became really important to make sure that we communicate with our people across DXC and make sure that they're safe and understand what's happening. We also managed to move our entire workforce remotely in under a week. An achievement from the size of the organization that we are and the complexity that we face, as well as helping our customers to do the same. So we took a very much of a shoulder-to-shoulder approach, as you could call it, to make sure that they could continue delivering on their existing work and what they needed to do in terms of responding. So, for example, as we moved remotely and as other customers moved remotely, they needed to provision laptops for their workforce remotely. We had to quickly respond to enable that. So I think the characteristic was quickly to move, but making sure that you kept your operational excellence in place.
Okay. And Vanessa, coming back to you and ConsenSys. ConsenSys has been involved in supporting systems for international trade and the supply chain, particularly with your Comgo product. Some fintechs, like yourselves, are focused on payments, cross-border payments in that sector, because many of the fintechs have been able to provide services at lower cost or speed. I'm thinking there of people like TransferWise and WorldRemit. How are people in that space weathering the storm when a lot of cross-border payments have evaporated?
Yeah, so, all fintechs are not created equal. We're going to see a lot of disparity in the innovation and how those companies survive. I agree with you that trade finance, cross-border payments, unsecured consumer lending, or SME lending are going to be hit pretty hard. And attention and focus will shift to sort of risk management, security, digital identity, and other activities. So, you know, global trade has seen a lot of disruption in the supply chain. We do a lot of work in that category. What we see is that projects are still being contemplated and started and initiated. So by understanding more about their supply chain and the potential disruption, like what COVID-19 has brought in, makes them want to sort of upgrade their systems and ensure that there's no offline issues and that everything can be secured online.
Okay. And Melissa, I mean, Marqeta was busy trying to expand its payments activities into Asia Pacific, particularly. Has the crisis put the brakes on people's interest in adopting your new platform, or has it actually accelerated people's requirement to move to something new?
A great question. We continue to field a lot of inbound interest. I think the uniqueness of Marqeta is that we're one global platform. And so companies wanting to work with us are looking for an integration that they can do once and then leverage that as they're ready to expand and create a wider reach across the globe. And they can do that with us. So it hasn't slowed anything down. I think it is worth noting that we're being a little bit more diligent and thoughtful in when and how we pull the triggers to expand. We're focused right now on continuing to expand our footprint in Australia. We launched there earlier this year and would like to, by middle of this year, expand that to offer our full suite of services, both program management and processing capabilities, to round that out. And we'll continue to explore other countries within the Asia Pacific region, which we find very interesting, given all the innovation that's done there, and that being a nice DNA fit for Marqeta.
How do you find doing that without face-to-face interaction?
It's presented its challenges. I mean, doing everything virtually is it's a little harder, and things definitely, we've noticed, have slowed down just a little bit. If nothing else, we're struggling with time zone deltas all the time, whereas when a year ago when I was doing this and traveling all the time, I was right in front of you. It was a little bit harder to miss steps and miss meetings and whatnot.
And Peter, I mean, DXC has lots of fingers into the payments ecosystem, particularly here in Australia. What changes have you seen in that space?
Yeah, so I think we've seen a mixed category of changes. Whilst some organizations have experienced large volume increases due to contactless, an obvious characteristic. Others that were part of the quarantining that had to put their businesses on hold had to scale down significantly and changed from physical channel to digital channel. So that was another rapid change. And some of them had their expansion, as Melissa was talking about, their expansion plans, whilst put on hold, they still needed to continue planning and innovating how they wanted to expand once things eventually get back to normal. So we also had to respond back in terms of enabling our design and innovation workshops and move that to a digital space, right? So from running it in a face-to-face environment, significantly easier. Now you've got to have the facilitator change their capability to make sure everyone's engaged and you participate. And how do you do a whiteboard and a paper process map digitally? A lot of those challenges came up, and I think those are key drivers going forward. But whilst that's happening, I think a lot of the where we are now, organizations are expecting to scale up rapidly as we start moving out of where we are in terms of lockdowns and things like that. And we need to be ready for that. So I think part of that is going to be certainly resilience and reliability is really important as customers have now moved to a digital capability. we've seen a demand from our side from a contactless perspective to introduce a digital receipt service, right, to enhance that. Whilst you're gone card or phone, you've still got to pass the paper receipt. We've got to get rid of that now as well. And I think that's a trend going forward.
I saw CBA had some announcement with Slip, was it, the other day?
Yes, correct. The good thing, because the market is large and it's new, digital receipting, a lot of retailers have their own. These are national. This is a national industry service. So I definitely see both of our services and their services working together as we get saturation over the next year to 2 years.
Okay. So I know that some fintechs have sort of jumped on new opportunities arising from the virus. For example, in Eastern Europe, there's a company called Zeno, which quickly built a system for authenticating government aid applicants and dispersing funds. For the three of you, do you know of other fintechs that have really benefited from the crisis because it's forced people to do things differently? Vanessa, in the US?
So I think the fintechs that have benefited from an accelerations were the ones that are, sort of ripe for disruption, and it was already a trend, but the coronavirus sort of accelerated that, whether it's in payments or other online services. And of course, they see a huge surge in demand. I think traditional incumbents like banks, any company that had physical location and services are going to be hit really hard and may not recover after this crisis. There is also, on the payment space, I think it really depends on what sector and what service also they're servicing. So for example, if you look at Square, and I know it's not a startup anymore, but they just posted a loss of 106 million, even though they have a huge footprint. And despite that, their stock soared. But there's a mix of pull and push for those companies.
And Melissa, is there anybody you've identified that's sort of jumped out because of the problems?
I guess outside of identifying a specific startup, I think we've been able to lean in, Marqeta specifically, and help the on-demand delivery customers. They're getting a lot of pressure on them to be able to mobilize a workforce relatively quickly and seamlessly in order to meet the demand from the consumer. And we offer a tokenization feature as well as virtual payments. And so that has assisted those companies in able to onboard a worker and get them out there to be able to facilitate the business and make deliveries right away in a timeline that they've never been able to do before.
So this is like in-app payments?
Mm-hmm, yeah.
Like yep. Uber Eats and
whatnot, yes.
Okay, got it. And Peter, you were talking about the jump in contactless. I mean, basically, Australians don't want to touch cash anymore because of the bugs. Is there been a fintech that's sort of captured on that and done well?
Look, so
other than yourselves, of course.
So absolutely. I mean, you touched on the CBA Slip connection, right? That's a definite big one, right? It's a massive catalyst. Can you imagine if we weren't going through this scenario, we would still have folk in payments dominating potentially with cash and other methods. This is going to change our behaviors from a consumer perspective and cardholder perspective around how we interact from a payments perspective. As Melissa was talking about tokenization as well, fintechs need to start looking at, it's no longer just providing that service, is how do you now provide the digital service and a complete digital service with those additional aspects. So I certainly definitely look at Slip as a massive benefit out of this situation with their digital receipts, and kudos to them that they were certainly the first to pioneer this in Australia. We've been at it for 6 months now, so they were before us, absolutely.
Okay, and so that's looking at specific companies that might benefit from the crisis, but what are your thoughts about how the crisis is going to impact the overall fintech sector? Is that going to vary by country or by the length of the disruption? Vanessa, back to you. What do you think is going to happen to the overall sector?
So I think there's going to be issues around funding the companies. There was a global survey. It was not just fintech, but it was early stage startups in tech that showed that 40% of the startups would not have runway after September. So depending on the length of the crisis and the willingness of VCs and others to fund them, we might see an issue in consolidation in the space, maybe acquisitions of these early stage startups that would not survive otherwise. And so we see a discrepancy between those ones and the sort of large, more unicorn type, which have secured funding or had started funding before the start of a crisis. So think about in the US, Robinhood, for example, who just raised $200 million, in the middle of the crisis. So everyone who started their funding before the crisis and have a good story that is not damaged by the virus will have a good head start. So that's on the funding part. I think it's key. I think some of the companies will have access to government incentives and loans. So we know some VCs and portfolio companies who have had access to them, but it's not guaranteed. So that introduces a lot of uncertainty for them.
So timing was everything in terms of raising cash.
Yeah.
And Melissa, your thoughts? I mean, in Silicon Valley, we're going to see a whole lot of companies go to the wall, or are they well funded?
I think we'll definitely, I'll echo what Vanessa said, definitely share the same sentiment. We're going to see some acquisition and some of the early stage startups not be able to weather the storm of this. I do think this also presents a unique opportunity for fintechs and financial institutions in the US to partner and create a very exceptional digital first experience for consumers. I think that's going to be sort of the demand of the consumer as we come out of this. How do you service me and what does that look like? And digital is going to be top of mind. And so I think there's an opportunity here to create something amazing. Whether or not it happens, I can't predict, but there's plenty of opportunity.
Right. And Peter, back here in Australia, I mean, we were about to see a rash of neobanks hit the market, far too many, in my view, to be sustainable in the long term. And now that some of them might never get there. What's your view?
Yeah, so our view is two aspects. One is going to be relevance going forward, and the second one is cost optimization, right? So regardless of where you are, relevance going forward is responding to what the new emerging outcomes are going to be for us as consumers and for services and payments at industry level. But because of what's happened, many organizations, again, there's the top end of the scale that have benefited and would then want to continue. Others that haven't will certainly be looking at cost optimization and potentially no longer investing in really innovative fintechs to help them. And similarly with those neobanks as well. How do they now continue to drive to attract customers at a cost optimization level and compete successfully and maintain their revenue model without without destroying profit and revenue for their future. So that becomes an essential part. We see that those, especially like the neos and those that are wanting to disrupt, they're going to have to adopt a partnering strategy going forward at a far greater level than what they've done before.
So picking up a point that Vanessa made about consolidation, is this going to be an opportunity for the legacy players, if you like, or the bigger players in the market to come along and pick up some of these fintech and neobank assets on the cheap?
One would think so, absolutely. That's quite probable, right? It's like the share market. A lot of the shares prices are way down, and you can predict which ones are possibly the horses to back going forward. So that's absolutely going to be taking place. Provided that they foresee that they are no longer just a one-shop business, they've got to start to utilize the innovations that the fintechs bring to the market versus doing it themselves.
And for the three of you, are there any general characteristics of a fintech company that's going to do better out of the crisis or survive it versus those that might hit the rocks? Back to you, Vanessa.
So I think you need to look at the sector. Let's say the payments sector, you have to look, as I said before, a little bit at the underlying market that the payments serve. And I think that will give you a good idea. So let's say the company is already profitable and it's looking at some key areas like, you know, digital and retail payments, or lending infrastructure, or CRM, data analytics. So all these areas will be sort of preserved, financial planning, et cetera, and trading. Because even though you know, people have been spooked by the stock market, people are still trading. Companies like robo-advisors may not do that well in that context. But if you're in the trade finance and the cross-border payments and all the sectors I mentioned before, that might be a struggle to survive and expand at that stage.
Melissa, your thoughts on what positions of fintech to survive this?
I think those that focus on a digital first user experience will have a better outcome. Of course, that's just one of many. They can't just focus on a digital experience and not have a good solution or a good value proposition in market. And I think beyond that, we have to look at what does working look like post this. I think there will be a lot more remote workers, and for some of us, some companies, that's still very new and we haven't really figured it out. And so being able to continue to support the people that you have working for you is going to be essential.
Any thoughts, Peter?
Yeah, so I think certainly organizations that may be looking at the lending aspect of the market and lending services, they are certainly going to be very challenged around the outcome around all of us on our credit status, right? And as a result, you may find there's no longer that many folk that are going to be qualified for those kind of lending services. And secondly, it's certainly going to put pressure on their ability to have a really innovative access to low-cost liquidity to support those kind of things. So I think going forward, they should be looking at services that are going to support. So in other words, how do you better manage your finances, right, to maximize your outcomes? I think it's going to be those type of if I can call it provisional or proactive services that are going to benefit us going forward versus some of the traditional services from fintechs.
Yeah, interesting. I was on a call earlier today, in fact, and we were talking about whether the crisis was going to accelerate the adoption of open banking or slow it down. And it was the credit or credit loss aspects of the crisis that some of the participants felt would accelerate adoption, at least in the Australian context, because a lot of people here I'm not quite sure what the situation is in the US, but at least in Australia, a lot of people have opted to defer payments or have a suspension of payments on their mortgages. And APRA have said, well, after 3 months, and then after 6 months, and then after a certain, again, you've got to assess the position of those people. And there was a view that open banking, obviously to some extent facilitated by a number of fintechs who are operating in that space, would be potentially accelerated because the banks in those assessments will want to see, if you're a multi-banked consumer, they want to see what's happening in your other accounts before they take a view on whether continuing the suspended payments or not. Do you see that in the US? Is that something the banks have done over there, is offer a suspension of mortgage payment?
What I see is a lot of, and even before the crisis, some innovation on the credit scoring and trying to assess the consumer or the borrower in a different way. I haven't seen that really, grow as a market opportunity, just because it's very complex to assess a credit worthiness, and unless you're willing to go completely outside the box and the existing framework, it's challenging.
Melissa, any comments on that?
No, sorry.
That's not an area for you.
Lance, sorry, it's definitely going to be around that origination and traceability, right? Because effectively, a lot of us are, whilst negatively impacted, are not necessarily negatively impacted because we've been poor around managing our credit or our finances. Right? We've had this break in between, and as your employer comes back to light, you effectively get your position back again. So should you be penalized for that period or not? And this is where the challenge is going to come in. What did that period have as an impact to your overall financial status? And what is the predictive outcomes of what that's going to look like for you to continue, right? So you may not have been able to put on hold all of your debt payments, but you could have that now built up. And what does that now do in terms of your future capability from where you were? So I think the assessment certainly around credit and provision of credit and open banking and how they share that information is going to be a lot more essential. But I think they also need to be a bit more responsible around the information that gets shared, because sometimes it can skew the outcome that you want to get because you're just getting this wealth of information, and your predictive outcome gives you the wrong one, and you end up making access to the credit that's necessary much more difficult than what it should be, and detrimental now further to the industry as a whole.
Well, at least in the Australian context, the banks here have gone from the bad boys in town to sort of the good boys now, because they're really pouring the money out and the forgiveness. But it would be easy for them to flip back onto the front page for all the wrong reasons if they start pulling in the strings. Entirely.
The great thing that we have here is the free interest on a balance transfer. So you can move 15 grand from one credit card to another credit card and have free interest for 24 months. I mean, that's phenomenal. Are we going to continue to see that happening? Maybe, maybe not.
So for your own businesses, I mean, Melissa, you talked about the new way of working, and is it going to continue? Are we going to continue to not bother to go to the office, but just work out of our homes? As we re-emerge from the other side of the COVID crisis, will each of your own businesses that you're operating in, will there be permanent changes to that? Or will it be going back to the way business used to be? So what would happen at Marqeta?
I think we will emerge from this being more flexible in how we work and the requirements around showing up in the office. I've been at Marqeta, for quite a while, and it's always been you come to the office and you work. They've just always leaned in that regard. I think out of this, there's going to be more individuals that would prefer a more flexible working arrangement where they can come into the office maybe a couple times a week, but work from home the remaining time of the week. And so we'll have to figure out how we solve for that and how we ensure that we're still successful in getting work done and meeting client commitments or customer commitments, and supporting the employees.
And for your own role, I'm assuming that face-to-face interaction is required for business development. But is that going to change as well? Do you think there'll be less face-to-face interaction with the customer?
I do think in my role specifically, the travel will be reduced, and I will continue to operate from a more remote environment, trying to figure out how to support our expansion efforts. It does make it a little bit more challenging, but I think the amount of travel will stay reduced for a while before it goes back to normal, if it ever does.
Yeah. Well, we're probably not going to let you in down here for quite a while. I apologize for that.
Yeah.
Vanessa, what about ConsenSys? Is business as usual or a change?
So I think it's going to be business as usual with less travel, like Melissa said. And I see us being much more focused and conscious of cost and time that we spend, on a day. Like if you have 1-2 hours of commute and you can be at home, how does that impact your personal and work life? And I think a lot of people will choose to work remotely. I think what is necessary is that people can meet as teams in person, get to know each other. It's easy for us to not change because we've already worked together, we're used to it, etc. Starting off in a completely online environment may be challenging for some people. I'm thinking also about the more junior people in our staff who need to be trained. So how are you going to solve for that? Is a question that we're asking ourselves every day.
In it DXC, Peter?
Yeah, I think we're definitely going to be seeing a bit of a hybrid and a lag outcome of this. So absolutely, remote working is definitely going to be a factor going forward, and we've certainly focused on making sure that we discipline our teams and our leaders around maintaining that human connection through digital and remote working. And I think that's definitely going to be an aspect going forward. But can we go back to how we were 6 months ago? No, I think that's going to take a good year to get back to that. We are a customer-facing organization, and we do like to get out and work on site with our customer, and that's going to be required. And I think it's going to be a scaled up approach towards getting there versus when the bell sounds, lockdown's over and we get out, we won't be seeing that immediately out the door. But we still need to support our customers. So if a customer has now got that pusher where we've been helping them with their strategy, we will certainly follow with our customer if that's the requirement.
Together with the lift, as you were talking about, Melissa, in online transactions, there's been an increasing use in the market here, at least, and maybe also in the US, of the buy now, pay later services. I mean, they historically in this market, they've only been equivalent to perhaps 2% of credit card throughput. So although they get an enormous amount of airplay, they're not really handling a huge amount of payments. But they have grown during the crisis just as traditional payments have gone down. How do you see that sector going forward, both from a usage point of view and then the credit risk that sits with it? Any views from that?
Yeah, I think consumers continue to use them. They are fairly popular in the US and serve a purpose and meet a need that a consumer has. I think what Peter highlighted around how do they do the scoring and how do they underwrite me to give me the credit that they're giving me is going to be interesting, and that's going to need to involve to not only ensure that they're offering loans or extending credit where they should be, but also protecting the business itself to make sure they're not taking on additional risk. And so I think they continue to get used, and they are fairly popular here. It's just, I think the way they go about the scoring will need to be evaluated too.
I mean, you've got people like Afterpay, for example, at least in this market, don't bother to go to a credit bureau before they give you the facility. So one would think that their exposure would be higher than someone like Zip, who's one of their competitors who does go to a bureau. So it's going to be interesting how they play out in the market in terms of their losses. But you see them being used more in the US. Vanessa, do you see that?
Yeah, and I think I agree that the risk will only sort of be assessed or resurface around September, when people really start to default if the job market doesn't pick up. Yeah. And that's going to bubble up for sure.
Yeah. Well, yeah, so that's a good point, Vanessa. That's where they make a lot of their money, is when you start defaulting. That's when their revenue in terms of their organization really starts to kick in. If you're doing the right thing, you should be okay.
Well, as long as you end up paying, because write-offs are no good.
Correct, absolutely. As long as it's not a write-off, but you're late or whatever it is, and there's some penalty fees in there, they're smiling. They're smiling a lot.
I think Camilla's got some questions for us from elsewhere. So Camilla, do you want to come back in?
There we go. Yes, I wanted to encourage the audience to ask questions. We're open and we have some time for that. And also listening to this interesting conversation, I had a few questions by myself, but I won't hoard the time too much. And we've been talking a lot about like the uptick in digital payments, which of course is this big push into it because you can't go out and you can pay with cash. But what we've also seen is this increase in fraud that's come with it. And I know Marqeta released a really interesting white paper on fraud earlier this year. I think the research was done before the pandemic, but it really shows how most end users are still very worried about fraud when it comes to digital payments. So I wonder, panel and Lance can also chip into this, is what do you think we will see for innovation to mitigate fraud around digital payments? And yeah, it's open up. Maybe Melissa maybe wants to answer first, as you had the great white paper I've been taking numbers from.
Fantastic. I mean, one thing we offer to our customers is just-in-time funding. So they're collaborating in the authorization stream. We receive the ISO 8583 message, make a call out to our customer, let's use Instacart, give them some information about the transaction. Then they can apply some additional logic on their end that says, yes, this transaction should be authorized, or no, decline it. We receive that message back and then push that down to the merchant. And so that definitely helps to mitigate risk. It, of course, doesn't protect an end consumer. In this example, it is something that Instacart can leverage to mitigate and protect fraud on their side.
Yeah, you go, Lance.
Yeah, in the Australian environment, I mean, you've got to separate fraud from scams. So fraud is when somebody's made an unauthorized payment from your account, and that in our case is primarily cards on websites, card not present transactions, because with chip and PIN and contactless, card present fraud in Australia is very, very low. But the thing that's on the rise is scams, and particularly ID takeover, and effectively either a scam where you've convinced the consumer to do something that they really shouldn't have done, or you pretend to be the consumer and do that transaction. So we've seen that, again, a lot of airplay, but it was a very small amount of money, but in the superannuation release. So in the Australian environment, you've been allowed, if necessary, to dip into your pension monies. And there's been some scams or fraud. Effectively, they're frauds, but it's a scam because somebody's taken over an ID, pretended to be that person, and authorized the money to come out of the superannuation account. I think, to answer your question, Camilla, there are a lot of companies trying to tighten up authentication, but ID takeover is definitely a big business now. And until we get some strong ID or digital ID system, like we saw in Sweden when we were there last year, it's going to be difficult.
Vanessa, what do you think? Because blockchain technology is a little bit different on this space also. So your reflection, please.
Yeah, so digital, I want to piggyback on the digital identity because it's been at the cornerstone of blockchain and really a foundational element, because if you're able to be in charge of your ID and you don't have other parties defining you or using your ID or your consumer behavior, you're able to manage that completely. So having a unique digital ID based on the blockchain is something that we're deeply involved in. We're managing one of the standards group around digital identity called DIF, and we collaborate with a lot of other people in the industry to define what is the minimum, information and format and security that you need to create digital IDs, and then transact on a token basis or cryptocurrency basis seamlessly and peer-to-peer.
Yep, totally agree with that. I think that's important. That's a very important aspect when we look at open banking and sharing of information. You've still got to recognize who the owner of the information is, the customer, right? So imagine if you applied the public key infrastructure model and you could see Peter's or Vanessa's or Melissa's identity and how many other organizations have trusted that identity. That means you can trust that identity without compromising confidentiality. Phenomenal. I think blockchain is definitely a catalyst for the future way we do business. Absolutely.
Yeah, and think about, KYC requirements and, procedures that you have to go over and over if you're able to share that information without disclosing other essential information, and just a test, that could be a way that banks and other institutions work together.
Yeah, well, that was one of the concepts of the open banking protocols, was that if I've KYC'd at one bank, I should be able to transport that over to my next bank.
Mm-hmm. Yeah.
We've got a question from the audience here about brands, and obviously you've got well-established brands in the market and you've got fintechs, many of whom are unknown. Is there going to be a sort of a rush to legacy brands because that people feel secure with them, and new brands on the block going to have trouble getting customers because, oh, this is somebody I've never heard of, I'm worried about it? Marqeta is probably a B2B business, so it doesn't worry you too much. But well, in fact, all of you, I think, are B2B businesses. What do you think about dealing with consumers?
So I think it depends on, the value that you're creating as a brand, whether you're new or not, and how much you can connect with your customer. So if you come in a very niche market, there are still places probably for you. Acquiring a large customer base at this time could be a challenge depending on your business model. So I think that's maybe the challenge right now. If you wanted to take on some incumbent established brands.
Yeah, it's probably okay if you're Uber Eats because everyone's ordering out, but it's not so good if you're a new fintech that nobody's heard of.
Yeah, agree. Again, it comes back down to relevance, right? So in terms of a fintech, if you're going up in the similar service and similar environment as an Uber, you either have to have something uniquely out the box that's really relevant. Otherwise, again, you're gonna come back down to trusting of the brand, right? And then potentially, again, it's going to come back to those bigger brands partnering with these smaller fintech to help them scale up their service.
I mean, we saw that in the GFC, that prior to the GFC, the big four banks in Australia were losing market share in mortgages. The GFC hit, and then there was a sudden rush to sort of security, and they grew share again. So, however, in this instance, at least for us, maybe not the United States, it looks like it's going to be a short-term, short and hard hit, but things are already opening up back again.
And how do they get their message out, right? How do they get their awareness out? It's quite different again from what it was. You're not driving around seeing billboards anymore. You've got to make sure your digital channels are really spot on, and where your customers are. I reckon, again, Facebook, the usual aspects or suspects are there to get that awareness. So that's going to be really important in the digital time that we're in.
Another question's come in about what's the hiring trends within fintechs? Are they taking on new people or are they dropping them off? What are you seeing, Melissa?
I can actually even just speak for Marqeta. We've hired 50 people and onboarded them since the shelter in place went into effect here, and have a ton of open positions and have not slowed down our hiring. So we had to scale and figure out how to onboard all those employees remotely, get them up to speed, and ensure that they were ingrained into our culture. So for us specifically, we are still hiring aggressively.
And what about other companies you see in the area?
We've seen a lot stop hiring, put hiring freezes on, and not be able to onboard any additional employees. And for us specifically, we kind of look at that as an advantage. We might be able to pick up some talent we weren't otherwise able to. And so given that we're still hiring, we're looking to attract any of those available individuals right now.
Vanessa?
Like Melissa, I don't see other companies, hiring. Everyone is very careful. There's some people are being creative about, trying to maintain people on board, because in the US specifically, when you're unemployed, it's not like you have a lot of support compared to other systems. So we've seen companies trying, reduce the amounts of bonuses or freeze bonuses, reduce the amounts of what they pay employees in order to keep everyone and weather the storm. So that's one trend. The other issue is that there's a lot of people who are on visas in the US, and if you're made redundant, then you will have 60 days to go back to your original country. So that is creating also a different dynamic in the market to retain some of the talents, especially on the tech side. Mm-hmm.
Camilla, I think you had another question.
Yeah, I have one question that ties really nicely in what we're going to discuss next week also. So we have a question: what trends do you see around central bank digital currency? And I think specifically is related to the Bank of International Settlement went out and said they think that this might be fast-tracked a bit. And I think that IRS have had some challenges in getting money out to people in US. So do you have any views on that? Maybe starting with Vanessa again, as it's blockchain
Yes,
space?
so we issued a white paper on using in the Ethereum blockchain for CBDCs. That's available on our website. We've been deep into these discussions that are transformational for governments and central banks. And I think after the Libra announcement, that sort of triggered a lot of questions about what Libra would be and how would that even challenge some existing roles in payment systems. And all the central banks are either issuing RFIs, they want to know more, they want to know the implication, they need to understand both the micro and the micro implications of issuing such currency. But as you've seen, the challenges in the US in terms of direct payment to citizens or beneficiaries, in terms of prices, it's exacerbated, but these challenges still exist. And as the general trend is going to be digital first, I think we're going to see more and more governments engaging in that search. The Bank of England, I mean, a lot of institutions are looking at this.
Yeah, it's another of those topics that we discussed and saw when we were in Sweden on our study trip last year, Lance and May. Peter, I know that DXC also quite a bit of involvement in blockchain and governments. Do you have any reflections on this?
Yeah. So again, I mean, we're an absolute supporter of blockchain, right? And it is the technology going forward, but it absolutely has to have that heavy regulation that we see as we do normally with cross-border payments and any kind of digital currency. So on the one hand, we're accelerating it, and we do that as much as possible with our providers, but at the same time, we already effectively have digital payments through SWIFT networks and real-time payments. Real-time payments is significantly more pervasive across the globe. So can you get a payment from, I mean, I've tested to do a payment from Australia to South Africa. I can do the payment here in Australia at 6 p.m. at night, and it gets to South Africa the next morning, my time in Australia, at 6 a.m., which is sometimes quicker than what I can get payments traditionally from ANZ Bank to NAB domestically here in Australia, right? That's crazy. We never had that before. So I think the pressure is now really on blockchain and the various aspects that go around creating the digital payments to provide that certainty around regulation, which gives everybody confidence. And then I think the adoption will scale up from there significantly.
Melissa, do you have any last reflection on this before we round up?
No, sorry, not from me. No,
I think it's not. So what I'm referring to that we're having next week, next week's session will be with Sam. Oh, now I'm splitting his name. With very renowned top 7.
Sandy Pentland from MIT.
Exactly, Sandy Pentland from US. He's a professor and very renowned within the computer science space, and he's the top science. Oh, gosh, I'm not getting this right. So you have to dial in next week instead, and you will have a very interesting conversation around CRPD. Today, I want to say thank you so much, Lance, for leading the panelists and this discussion, Melissa for dialing in, Peter and Vanessa, and April. Thank you very much for collaborating with the Emerging Payments Association.
Thank you all for joining us.
Thank you.
For having us.
All right.